So I think the two acquisitions that happened and grabbed a little bit of headlines in this first quarter of 2025 was the beauty product company Minimalist, which got acquired by Unilever for just around 3,000 crores in Indian rupees, which is approximately 350 million in US dollar terms. Unilever picked up 90.5% from what data we have, and has left the remaining in the hands of the founders to be able to build out the company, who are continuing to work for Unilever for the next 2 years. So there is a implicit cash out. So this is classic. I think this is the way to understand it. Somebody who buys a business, especially a giant like Unilever, is buying to add to its portfolio of beauty and personal care products, which they're very strong in globally and in India. And fundamentally, they're trying to augment their portfolio with a brand that has captured the imagination of skincare in a very short period of time. And they believe there is faster growth in this than they would ever see in their existing portfolio, which is why these become interesting. That's why the premiums get paid for, that the growth is faster. And more importantly, under the Unilever umbrella, they believe that using their distribution might. For people who don't know this, Unilever distributes to somewhere between 1 million and 2 million outlets in India on their own, without maybe using other marketplaces or or other aggregators. And that's the kind of power they've built. Now imagine putting a Minimalist-like brand through those channels. You suddenly have the opportunity for it to grow even faster. And I think that's the attraction for Unilever. This is fantastic. And we're going to see this trend, I think, a lot more in consumer brands, where large companies have built, channel and distribution over a very long period of time, multiple decades, and a smaller brand which is aced D2C or quick commerce or marketplaces like Amazon, Flipkart, suddenly can erupt because it gets massive offline distribution. And so it was a pleasure to see something like this. This is probably the second fastest, significant size exit after Mamaearth, which went straight to IPO, which is also a 7-year journey. So here as well, this company, I think, went through a bunch of pivots and starts and stops up to 2020. And this was a story post-2020 that took off from what we read, at least in the media. And the sudden growth of almost a 60 million ARR and profitability is what I think interested Unilever to strike now rather than wait and buy an even more expensive company. And 5 to 6 times on revenues is a very significant multiple for a D2C brand. So clearly Unilever sees the value of growing this 10x. That's, I think, what's important. People will pay a premium for something that can continue to grow very fast, if not faster, under their brand umbrella. And second, they know it will take time to integrate this. They may or may not integrate it. They might leave it as a separate entity. There's a different culture, but the founders are important to transition that to professionals. For example, Carrot Lane Mithun Sacheti continued with the Tatas because the base that he got acquired at for a majority stake was very low. And he was passionate about building the business, and he built for 7 years and he held 25% or so. And he compounded that value incredibly. We're talking about somewhere from 100 million to 2.1 billion. So almost 20x growth in value over 7 years. So here, I don't know whether these guys anticipate that kind of growth. And also Unilever doesn't want to pay out that much value at the end. They're already paying the premium upfront. From what we understand, Peak 15 through Surge or over and above that and Unilever Ventures were the investors out here. So clearly a very good team, $15 million of total funding that went in. And from what we know, let's say Peak 15 had 20-25%. Unilever Ventures stake sort of is obviously one hand to the other. They witnessed the growth from within. The founders held majority here because that's the beauty of building profitably and building rapidly. And Peak seemed to have about 20-25%, which means, for like a 10x that they put in on their money, they would have probably made, they were probably put in 10 million and made like close to 80 to 100 million, or maybe a little less. But in 4 to 5 years, that's like an IRR of close to 70%, right? And so this is unique that, you get that kind of rapid growth with just limited funding, and it augurs very well for both the founders who've held on majority and make a lot of money, and the funds who participated, because they didn't get diluted heavily. And even with a $350 million outcome, they've gotten, let's say, even at 20-25%, that's $75 to $87.5 million of capital back. And, to get close to $100 million back in a sub $500 million acquisition in itself is rare. So this is a great story.